Hello teacher and hello class. Today I would like to talk about intangible assets. First of all, I would like to present about the definition of intangible assets. They are long-term assets and they are not physical substance like equipment or property, and they are not a financial instrument like bonds or stocks too. And intangible assets are usually acquired for operational use, and the cost of intangible assets will be amortized. And amortization will be defined as the process of allocating the cost of an intangible asset from the balance sheet to the income statement as an expense, and the expense associated with amortizing becomes an impairment loss, which is the acquisition cost being used up or lost. And then I would like to show the effect of impairment on financial statement as follows. As time goes by, when we have an impairment loss from intangible assets, we will reduce that intangible asset from the balance sheet, and then immediately in the income statement they will incur an impairment loss in the account of expense too. Usually, intangible assets will come from two sources. First of all, the intangible assets may be presented from the contractual rights, for example, leasehold patents, trademarks, or copyrights. The other source is the intangible assets may be made from purchase transaction, for example, goodwill. In terms of the leasehold improvements, uh, is where the tenant has made modification to a building, and the cost of that modification will become a capital expenditure, and that expenditure will be amortized over the useful life of the tenant or the life of the lease, whichever is shorter. In terms of trademarks and copyrights, we all know that trademark is a symbol, design, or logo associated with a business, and only purchased trademark is recorded as an intangible asset, and trademark has unlimited life but will be terminated by lack of use. Copyright is an exclusive right granted to protect artistic or intellectual properties, and the legal life of copyright is calculated from the life of the creator plus 70 years, and the copyright will be amortized over the period benefited. Moving to the patents. The patent is an exclusive right granted by the government to sell or manufacture an invention, and the cost of a patent will be calculated from the purchase price plus the legal cost to defend that patent, and it will be amortized over the shorter of the useful life or 20 years. Last but not least, as an intangible asset, goodwill occurs when a company buy another company with the purchase price larger than the fair market value of net assets acquired. The reason for the company to buy with the higher price is that company aims to the future profit. In terms of the cost, the excellent management, the great location, the incredible customer loyalty, a unique product or success, or etc. And goodwill will not be amortized, and it is impairment tested annually. And please remember that only purchase goodwill is considered as an intangible asset. And that's the end of the presentation of intangible assets. Thank you for listening.